you have to not look at us as a television production company or a film production company, right? We are fundamentally a content media company, creating, producing content at scale across platforms and across verticals, right?
Welcome to the Know Your Promoter series, and this is our 46th episode. Today we have Optimystix Entertainment Limited, and we have Mr. Rajesh Bahl, who is the co-founder and group CEO at Optimystix. How are you, sir?
I'm doing great. Thank you, Tanmay, for having me on your podcast.
So first of all, I would like to understand your background, the company's journey, and the name Optimystix itself is very interesting. Can you take us through the background of the name as well?
Yeah. So, Optimistic as a company was founded by my partner and promoter Vipul Disha in 2001. And and I'm just going to quote him because that's exactly what he says when this question is asked to him, that how did you get to the name of Optimistic? So he says jokingly that his blood group is O positive, which means O meaning optimistic, and positive to hai. He in that sense, and so वो खून से कौन निकाल सकता है, right? And he always says that life is beautiful and future is optimistic. So I think the genesis of that came from this particular piece, and that's how the company got incorporated as Optimistics, right? And so bit about Optimistic. It started in 2001, founded by Vipul D Shah, and Vipul essentially started his journey as a writer. He's wrote a popular television show called Dekh by Dekh, which is a cult show essentially. And then he went on to write feature films like Rehna Tere Dil Mein. He did some stint in South language. He wrote this film called Minnale. And then later he started directing television shows. And then I think very, very organically, he moved into sort of starting this production company, Optimistic. And today, as we speak, we are like 25 years in the business and still going strong, right? And then you essentially asked about my background. My background has been, fundamentally in corporate. I've spent more than, before partnering with Vipul, I've spent more than 22 years in the media entertainment business. My journey started with, Sony Music, and then sort of I went on to work with Universal Music, and from there sort of moved into the broadcast side, and worked with Disney Star, and post that I had a stint with a film studio, Eros International. Then in between, I did a digital startup, ran that for about like 4.5 years, exited that business. And the last stint before I partnered with Optimistic and Vipul was with Times of India Group, as the CEO for Time Studio. And essentially, I've been in senior leadership and CXO and CEO position for last, 15 years. And I joined hands with Vipul and Optimistic with a clear mandate, right? And the mandate was fundamentally to transform the successful traditional television production business into becoming a full-fledged content media company. What I mean by that is that sort of diversifying our business into feature film, into OTT, digital animation. So that was the mandate, to move from a non-IP business to owning IP, and sort of building various verticals and scaling them up, right? So that was the mandate, and this was very exciting for me as a mandate. Apart from obviously Vipul as a partner, So that has been my journey, and now I spent about 7.5 years with Optimistic, and when I started this journey, we were pretty clear that the vision was, as I said, to transform into a full-fledged media company, and then also set up structures and processes and governance and audit-ready system, so that eventually we can move into becoming an IPO-led company, and today here we are. We are IPO bound, and very soon we are sort of going to the capital market in terms of launching our own IPO. Yeah.
Your background is, quite very rich. Also, like I was reading that, our company has produced over 150 television shows and delivered more than 7,500 hours of original programming. Also read your quite, popular shows like Laughter Chef, Balveer, like a lot of names and movies I can see. Oh my God, too. So which are like quite popular. So can you take us through Optimistics, business model of the company and what key verticals do our business has?
Sure. So as a company, we have evolved significantly over last 25 years from, as I said, just from being a television production company to a diversified content and IP-led company. So today, if you look at our business, we operate across multiple verticals, including television, OTT, feature film, regional cinema, animation, and digital content, right? So this is pretty much the entire content ecosystem per se. And this diversified portfolio essentially allows us to participate across the entire content ecosystem while reducing dependency on one single format or one platform, right? And our revenue model is equally diversified. For if I have to sort of explain the revenue model, I have to break it down segment wise. So if you look at television and OTT, this I call as our cash engine. This primarily generate revenues through production. It's a cost plus margin model. Here we don't own the IP. The IP is owned by the broadcaster and the OTT platform. In feature film, we follow a completely de-risk co-production model where the rights are monetized before production is completed. This essentially reduces the capital risk while allowing us to participate in the upside through shared IP and profits. Because we work with studio and in a co-production structure, where we get studio on board to sort of finance the cost of production in lieu of they're participating in the IP and in the profit of the film project. Now, as we expand our business into animation and digital content, we intend to increasingly own the intellectual property and monetize it through licensing across multi-platforms, territories, languages, and future exploitation cycle. So for us, the way we break down our vertical and revenue models, so as I said, cash engine is television and OTT, which is more predictable and it keeps on generating top line and profitability. Film business for us is more of a value engine because we completely sort of de-risk there. We make some investment, but we don't take sort of massive risk on producing the film on our own. We pretty much de-risk it by selling the rights and then starting the production in that sense. So here we are capping the risk, but the upside is pretty much uncapped in that sense. And since we own the IP in collaboration with the studio, right? So this is more for us as a value engine because it will keep on sort of generating value for the business on a consistent basis and in perpetuity in that sense. And our compounding engine, which is the future ambition, what we have built for ourselves is to build our animation business and our digital YouTube business, which is where we will 100% own the IP and will monetize and across platforms and across various revenue streams. So this business is going to help us to get into newer revenue streams like subscription to advertising revenue to branded content, merchandising, licensing, gaming. Those are revenue streams which will open up for us as a business. And what differentiate Optimistic is not just the diversity of our businesses and the vertical which we have built, but the way we manage our risk, right? And every vertical has a different commercial model, as I said, and we have consciously built a balanced portfolio that essentially combines stable cash generating business with high value IP creation opportunities. And going forward, our strategy is to gradually increase the contribution of own IP while continuing to strengthen our core production business. And we believe that this creates more sustainable and scalable business model for long-term value creation. Yeah.
Got it.
Hello.
Hello, hello. Yeah, 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 you're audible. So, like, I
Yeah.
know as we are seeing, the content as a, family evolving around lot of things we are seeing from last 2, 3 years, the OTT segment as a whole going with a different pace and tangent, whereas the normal, traditional content not growing at that pace. And also we are seeing lot of new, content consumption, like maybe those audios, books, short videos. So how do you see content as a whole evolving from here, at least in the Indian markets?
Yeah. No, no, very, very interesting. With and media business. So the Indian entertainment industry, is entering one of its most exciting phases, right? Audience consumption is expanding across television, OTT, cinema, YouTube. YouTube has become the new broadcaster, and emerging digital platforms are creating opportunities for companies that can, consistently create quality content across formats. So in fact, if you look at last 10 years, it's very transformational in that sense, right? In this last 10 years, we have seen rise and advent and rise of OTT platforms, right? We have seen YouTube becoming the new broadcaster, fundamentally reaching to millions and millions of customers. We have seen the creator economy sort of scaling up, and today creators are becoming media moguls, or they are sort of becoming media entities and media companies by themselves. In last 10 years, we have seen how social media has scaled up, short form video, reels, and so on and so forth. Now we have also seen music as a business. The consumption has gone multifold in because of digital penetration, mobile penetration, and sort of interesting services which have scaled up, right? We have seen live business, the event live business, right, from music concert to even bhajan clubbing. They all are sort of getting a lot of steam, right? And within this last 10 years, we've also seen how regional cinema, regional language content is sort of becoming pan-India, and also appreciation of regional language content is, all-time high, right? People are sort of going out and watching their own movies in their own sort of languages, be it Gujarati, Marathi, and there are many examples of successful films which have done fantastically well in the regional. So so the point is that if you look at, it's a very interesting time because the content economy is at its all-time sort of peak, and of course scaling up. And still, if you look at from a number point of view, still from a contribution, if you look at media entertainment as a segment, in 2025 we were about close to $30 billion in terms of the industry. And by 27, it's been projected to reach $34 billion. And by 2034, the industry is sort of poised to grow to about 54 to $55 billion, right? Now, while these numbers might sound very exciting and very huge, but if you look at a percentage of the GDP, we are still talking about 0.7% of the entire country's GDP. And in comparison to, if you look at markets like US and UK, where the creative industries contribute about 4 to 5% of the GDP, right? So what it tells us that we are highly under penetrated in that sense, which also means that there is a great room to sort of grow this business. And today, I believe that the capacities have been built, the platforms have been built, the distribution has been sort of built, and there is enough and more audiences who are sort of wanting to sort of consume content. And I think the next 10 years are going to be for companies, or for people who have the ability to sort of create a particular IP or create entertainment franchise and own that IP, and are able to sort of monetize across these platforms. And also, adding to this, that the audience, if you look at our own sort of population size, right, about more than 35 to 36 crore of population is less than sort of 15 years, right? So the youth population is is a big number. So all this data and put together, if you look at, it's a huge market which is growing. And I think for us as a business, television will continue to be an important business for us, because it is a stable source of revenue and long-term broadcaster relationships, we have built over a period of time. And in OTT at the same time, will continue to invest in premium storytelling, which again creates opportunities for differentiated fiction and non-fiction programming, because you did sort of ask that question. And in the feature film side, we believe audiences are increasingly rewarding strong stories rather than, simply large budgets. So today, a movie comes in like Sayara and sort of break all the records with relatively new star cast, right? So this is essentially creating opportunity for disciplined companies, like us, who focus on compelling content while managing financial risk through structured partnerships and pre-sales. So, according to me, from our perspective, perhaps the big opportunity lies in animation, digital content, regional cinema, as I said, and regional stories today have the ability to travel nationally and globally, while original animation IP has the potential to create recurring value across various monetization streams, licensing, merchandising, and multiple digital platforms. Now, within all of this, technology and AI are also fundamentally changing how content is, sort of researched, developed, produced, and monetized. And from optimistic perspective, we are essentially, if you ask me, the next 3-year vision is that we are building a technology-first content company and not a content company who will use technology and AI just to sort of enhance its creative processes. So yeah.
Got it. I know, helpful. And my next question would be, what are our upcoming exciting projects across these all, different content styles? So, what do you feel are, very exciting projects coming out for our company?
Yeah, so I think we have built a massive and a strong pipeline of projects across television, OTT, film, and digital, and we are genuinely excited about the breadth of opportunities which are there, right? So, television, as I said, is our stable uh, platform which keeps on delivering renewal and recurring sort of businesses. So, we recently had a very popular show which became number one show across the broadcast network, which is Laughter Chef. We completed 3 seasons, and now we've taken a break, and we'll be soon sort of producing season 4 for Laughter Chef. So that's one property which is in the pipeline. One of our most successful show, which ran for about 10 years, 9 to 10 years on Sony, was Crime Patrol. And after taking a break, Crime Patrol is back, and as we speak, we are producing and we are shooting new episodes of Crime Patrol, which will soon go on air. Apart from that, there are two shows which are basically fiction shows, which are one for Sub TV and one for Dangal, which we are again producing, and as we speak, we are sort of that's part of the pipeline. And of course, there are other conversations which currently, because it's not sort of signed and sealed, I'm unable to talk. But there are again very interesting properties and IPs which we have created earlier are essentially coming back on the broadcast network. So that's on the television side. Again, OTT, we are working with Amazon MX, we are working with Amazon Prime, working with Netflix. So that's again a strong pipeline with full visibility which we have. On the feature film side, while we will continue to sort of do our Hindi mainstream films, like Diplomat 2 is in work in progress, and there are other film projects which we are doing, which we are setting up and which will get sort of produced this year. However, the pivot what we have made in the feature film business is our regional cinema strategy, right? And we discussed that in the previous question, that how regional cinema, the appetite has sort of gone up, and people are sort of watching regional content. So as a company, we have fundamentally sort of shortlisted, I would say, five priority languages, which is Gujarati, Tamil, Telugu, Malayalam, and Punjabi. These are the five languages where we are focusing, and a lot of work is happening around that, in terms of we're building scripts, we're building relationships, and we are sort of going to start sort of producing films in this particular language, and we have moved very fast in that direction. In fact, there are two films which are lined up in the regional, one in Telugu and one in Gujarati, which we are producing, which is going to go on floor this year. And out of that, in fact, one Gujarati film is already on floor. We are fundamentally shooting that film. So regional is a pivot because here, we are sort of investing our own money to create, because the ticket size is pretty low, and that's how we are sort of defined, because we don't want to sort of take risk which are disproportionately high, and it changes our policy or our strategy. However, in regional cinema, because of the nature of the filmmaking, the budgets are low in terms of comparing to the Hindi mainstream. But here again, also we follow the de-risk model, where we are selling three rights and sort of pretty much recovering the cost of the production. And then for us, the box office remains as our core profitability or core revenues, which can help to sort of enhance our profitability profile in that sense. So regional is one pivot. What we are focusing next couple of years, and that's primarily the reason we are raising this growth capital, is to invest in the regional cinema side, and invest in our animation business and digital content business, which is essentially launching our own YouTube channels in various category, and largely focusing on non-fiction side of the programming on YouTube. So there are plans which are already sort of ready, and we will, in next couple of months post listing, this is something which we are going to sort of actively work on. So on the animation side, I would just like to add that Balveer, which is one of our very popular child superhero, it's a television brand, and we have carved out the rights to Balveer in terms of animation. Rights are with us in perpetuity, and that's so we are building this whole interesting world of superhero characters in animation, which will first get launched on YouTube and then fundamentally move to other platforms. And the key driver is going to be Balveer, which will become the engine to drive that animation business for us. So yeah, it's exciting time, strong pipeline of projects, and and we are quite sort of happy with what we have. Also, there are, of course, because as I said, as you're aware that we are IPO bound, I cannot disclose specific projects before getting into formal announcements. But lastly, I would just like to say that our pipeline essentially reflects our long-term strategy of balancing, stable commissioned work from television and OTT with completely moving into a IP business that can generate value over multiple monetization cycles.
So, sir, like, what would be our revenue breakup between our verticals which are given? One is your production and distribution, one is your film rights and the television programming, and then the OTT. So, what is the current revenue breakup and how this would shape up?
Yeah. So the way we see or we break down the revenue are fundamentally in three segments or three verticals, right? One is television, one is film plus OTT, and the third is digital. So if you look at our numbers in FY26, we did about 136 crore in terms of our top line, and television contributed about 45 to 46% in FY26. About 48 to 49% contribution came from our film and OTT business, and about 6 to 7%, the balance 6 to 7% came in from digital. So that's the rough split which we have. And going forward, while I cannot obviously share the numbers with you in terms of FY27, 28, 29, we of course see the mix sort of changing in terms of contribution. While television, as I said, will be still be stable, consistent to sort of give us both top line and profitability. But that business will, grow by about 10 to 11%. And from a contribution point of view, we see in next 3 years, it will come down from a 44-45% to about 34-35%, right? And film and OTT business is where we will see sort of growth coming in, both in terms of contribution to our overall top line. Right now we are already at about 47-48%, and I think it will sort of pretty much be stable, but it will move a few percentages to about, maybe 50, 52, 53%. Digital is where our real focus and real growth and real compounding will happen is, and currently we are at about 6 to 7%, and that I see in next 2-3 years, sort of reaching close to about 14 to 15% in terms of contribution of our overall top line. And as we move forward, of course, the top line will also sort of keep on growing, and which would mean that even at a 14-15% in digital as a percentage of total revenue is a high number in that sense, a high value number. So all our growth capital, what we are fundamentally raising, as I said earlier, is going to get invested. Every single rupee is going to get invested in long-term assets and building IP business, in digital, in animation, and in regional cinema, as I said. Yeah.
Got it. So our financial performance has been, quite strong, but I'm seeing our margins have significantly, expanded. So do you feel these margins are sustainable, and is there is an enough headroom to take those in again in an upward trajectory?
No, no, absolutely, absolutely. I mean, the improvement in our financial performance over 25 to 26 and the margins, which are the reported and audited margins, is fundamentally a result of our conscious strategy, rather than a one-time event, right? We have strengthened our project mix, our revenue mix, right, and we have improved execution efficiencies and fundamentally adopted a more disciplined approach to the way we allocate the capital. So today and going forward, television and commissioned OTT projects will provide relatively stable margins, right? While our de-risk film model and increasing focus on our own IP build, which I spoke about, will create opportunities for higher and long-term sort of value creation, right, in that sense. And also, as I said, that we are also sort of using technology. We have taken massive sort of steps in that direction. And in terms of using generative AI, we have built our own tech platform, which is our own proprietary in-house content management system on back of generative technologies like Google VO3 and other. And we are also working very closely in collaboration with Google to sort of to build that whole piece, right? And this kind of workflows are helping us to improve productivity. It's obviously reducing the production cost, and it's shortening the content development cycles, right? And this is also going to help us to sort of enhance our margin going forward, right? Now, while margins will naturally, fluctuate depending on the business mix, but our objective is to build a sustainable, profitable business with strong governance and consistent long-term returns in that sense. So for us, margins will will expand, right? Because as I said, your non-IP business will can give us only so much, but when we move into IP business, driving through digital, they are sustainable, and there is definitely room for growth in that sense. Yeah.
So, before letting you go, what would be your final message you would be leaving for your potential shareholders?
Uh, so I think for the message for our potential shareholders and our existing shareholders, will be, which I keep on saying in all my conversations and investor meetings, that you have to not look at us as a television production company or a film production company, right? We are fundamentally a content media company, creating, producing content at scale across platforms and across verticals, right? And obviously owning the IP, and moving very, very aggressively in that direction. And if you look at us for over 25 years, Optimistic has, built its reputation on creativity, on execution, and trusted relationship across India's entertainment industry and the entire ecosystem, right? And we have been consistently delivering great IP, great shows, and as a company, we are sort of profitable, right? And now we are entering in our next phase of growth with diversified business. We are a zero debt company, and our financial performance is improving, and we are absolutely clear in our long-term strategy. So it's not that, post raising capital, we'll figure out what to do with the capital, with the growth capital of the money. The strategy is pretty much ready. We are in that state of readiness where we are just raring to go, and the growth capital is just going to sort of, help us to kickstart our strategy to build the next Optimistic for the next 5 years, right? In that sense. And we believe that the future belongs to, as I said earlier, right? If future belongs to companies that can combine creativity with technology, which owns valuable IP, and is able to execute with financial discipline and prudence. And I think that is precisely the business we are building, right? And our commitment is to continue building Optimistic with a long-term perspective. As I said, strong governance, standard, disciplined execution, because that's very key for our business, right? To optimize margins and to optimize efficiencies in that sense, so that we can create sustainable value for all our shareholders. So, I mean, that is how I will sort of want the potential and the existing shareholders to look at us, because there is a great opportunity to build some serious value over the next 5-10 years in the media business. As we discussed, it's a sort of underpenetrated business, and the content economy is at all-time high. The consumption is obviously is high, but it's also scaling up, right? And today, as a company, we have built a diversified model, and we just need to be sort of at it, just focus on delivering our long-term strategy. So, yeah.
Thank you for your time, and thank you for delivering such a wonderful content, and hoping the your new innings in the capital markets also tend to create a blockbuster return profile in the longer term. Thank you.
Thank you, Tanmay. It's great talking to you. Thank you.